Hello everyone, I'm John with JP Strategic Investments, and today we're going to talk about some important scenarios that could play out leading up to and shortly after Tesla's S&P inclusion date on December 21st, some of which could actually cause the stock to drop. Now, first of all, I do want to preface this video by saying that if you're a long-term investor in Tesla, you may not care about any short-term dips or volatility. That being said though, even as a long-term investor, it's good to know about any reasons that a stock might drop in the short term so that you can evaluate those reasons and see if they may present a buying opportunity. So let's go over some of the things relating to Tesla's S&P inclusion that could move the stock up or down. One of the first things that we have to remember is that there are a lot of short-term traders here trying to get into the stock and ride the momentum and the run up until the inclusion. Most of these traders are not interested in holding Tesla stock long-term, and they don't care about the fundamentals. Most likely, these traders will sell off shortly before or shortly after the actual inclusion date, depending on how the stock performs leading up to December 21st. These traders getting in and out of the stock could have a few effects on the actual stock price itself. Most likely, many of them got into the stock Wednesday and Thursday after the announcement and contributed to the stock's big gains on those days. These investors will therefore likely cause an exaggeration of Tesla's stock upwards move leading up to the inclusion date. This means that when these traders get out during the week of inclusion, the flood of selling could cause the stock to drop shortly before or after the inclusion. Many of these traders will also be trading in and out of the stock as it moves up towards the S&P inclusion date. This could make it a very volatile ride for the stock over the next month or so. Another thing that could affect the stock is if Tesla decides to raise money and issue more shares. There's actually a very good possibility they could do this before the inclusion date because not only is their stock at an all-time high, but the inclusion will be taking up a lot of their shares. If you account for all of the money currently tracking the S&P between the actual S&P fund itself and other index funds and securities that track the S&P, it's over $11 trillion. That means that if all of them were to purchase the amount of shares necessary to include Tesla at its current levels, they would need to buy over $134 billion worth of Tesla stock. That's over 25% of Tesla's current market cap. Now obviously it's not like they're taking a quarter of Tesla's shares off the market. They would still be traded whenever anybody trades an S&P fund. What it would mean though is that 25% of Tesla's float would now be traded based on the broader market only, with basically zero consideration of Tesla's individual business success. To use market lingo, you could also say that this moves Tesla's beta closer to 1. Most companies, especially successful ones, generally want their investors to be educated about the company and interested in the company's success. So most likely, Tesla wants as many of their shares as possible to be traded independently and not tied to an index fund. Now, it's even possible that Tesla could issue more shares directly to the S&P depending on the specifics of their inclusion agreement. The S&P might even ask them to do this because it would make the entire process of purchasing the shares go smoother because everything would be agreed on beforehand. Now, this could have some major effects on Tesla stock. If Tesla does decide to issue shares directly to the S&P on the inclusion date, that would obviously affect the level to which the share purchases will affect the actual stock price depending on how many shares are issued and at what price. This is because the shares that are issued will not be bought on the open market and will therefore not affect the stock price. This could significantly dampen the effect to which Tesla's stock is affected by the inclusion on the actual day. Most likely, if this were to happen, it would be announced earlier, which could cause a drop in the stock prior to the inclusion date, as short-term traders would realize that their window of opportunity has just gotten smaller. If Tesla raises capital by issuing shares separately from the S&P inclusion, it won't have as large of an effect, but it could still have a net negative effect on the stock because of share dilution. One last thing that could affect Tesla's stock involving its inclusion is that many index funds may not actually have to purchase Tesla shares depending on the rules and requirements that they've set up with their clients. For example, some funds may not have to track the S&P with 100% accuracy, and they may have the ability to make certain deviations at their discretion. This means that if they feel that Tesla will be detrimental to their fund, they could decide not to purchase the shares. Other funds may have grace periods that allow them to purchase the shares within a month or two of the inclusion. This means that the funds may wait till after the inclusion for the short-term traders to exit their position and the stock to drop. That way they can purchase the shares later at a lower price. This will also reduce the overall shares that will be purchased during the week of inclusion, meaning the stock might not shoot up as much as expected on the inclusion date. Although this could also have another effect, reducing the potential drop in the stock when short-term traders exit their positions, because these funds will be creating buying pressure pushing the stock back up. Finally, there could also be funds that are allowed to purchase the shares early, which could be contributing to the current rise in the share price. This will also reduce the amount of shares that could be purchased on the actual inclusion date. So those are some of the scenarios that could play out around Tesla's S&P inclusion. Whether you're a Tesla investor for the long term or just trading Tesla right now, I hope you found this video helpful. And if you did, please consider liking and subscribing. And other than that, have a great day.